What's up guys, welcome to episode 9 of the PA series. Today we're going to talk about how can you swing trade or invest with price action, because as I mentioned several times before, price action is universal on all time frames, on all assets, on all markets. So crypto, forex, stocks, futures, whatever, price action works on everything because every asset has price movements, and it also works on a higher time frame. Of course, when people invest, they also look at fundamentals most of the time and not purely of price action and liquidity, but that's what we do and it doesn't affect the strategy. So that's what we are going to talk about in today's video. Like and subscribe, I really appreciate that we're nearing the end of the PA course, but that doesn't mean this is not as important as the other episodes. So swing trading. Swing trading is basically a synonym or what people mean with trading and not closing it on the same day, because that's day trading. They swing trade or invest for the future. So most of the times crypto related, that's also not with leverage, because leverage, of course, if you trade, you use leverage, you borrow money from your exchange or broker. But if you invest, most of the time you just only use your own capital and actually buy the asset instead of loaning it, lending it. And so that's the main difference. And another difference, but I already mentioned it in the trading versus investing video in the beginner course, is that with trading you can entry whatever you want, in the sense of you're always risking 0.5% or 1%, maximum 2% of your capital, while if you invest, you're most of the time risking more in general, or one asset even. So that's why you can't take as many risks as you do with trades. For example, I learned you guys the reversal trade type 1. So what was that? That was when price makes low of your level and you immediately entry hoping that was the bottom and price moves. But as mentioned before, and I also have that sometimes, maybe this level is not strong enough and price goes to your stop loss in 10 seconds. And that was your trade. And that you can't really have that if you risk like 10% of your portfolio, 10% of your assets in one investment. You can't risk that. So that's why, and now I'm going to use reversal type 3, but you're not going to call it a reversal type 3 when you invest, but just same thing. You have your level, you wait for price to sweep it, and maybe then you see some strength, you see gain as we call it, and then on the hold you can entry. And I know for the long run you're going to miss this range, where from the absolute bottom to this, or it's not 300%, but you're going to miss this range here, this profit you're not going to have, but you are way more certain that this is actually going up again, and that this is not just going to jump and you're going to be minus 10, minus 20, minus 30 and sell for a loss because you're in panic. But then you're way more certain that price actually reversing, or not even reversal wise, but just going in the direction that you want. Okay, so I hope that is a bit clear. And now talking about levels, because last episode I mentioned how to chart, how to look at your levels. Higher time frame analysis is basically the same, just a little bit different. Of course, always zoom out on the entire asset. I don't care if you're investing in Bitcoin, which is from this decade, or you're investing in a stock that has been around for 50, 60 years. Always look at the bigger picture. And of course, that's my opinion. If you look more into investing in stocks, I would also look at the fundamentals and also do a bit more research than just purely of price action. But on Bitcoin, Ethereum, Solana, and most altcoins, just look at price action. I think that's enough. So this is Bitcoin price chart. Of course, not going to the entire story because it's also not that crazy and many people know it. You clearly see it with all-time highs, made low, all-time highs, pullback and meet new all-time highs, and we're currently in a downtrend to the bear run or new local lows. So that doesn't even mean anything. That just means like, okay, now I know the full picture in the back of my mind. Then we go on the daily. We don't really draw levels on the weekly. While you could, for example, let's say this is the top, then this is, I guess, on the weekly your failure, because this is your move to the high. Where do you lose it? This is not really a loss here. You lose it, you retest it. So this is your weekly move to the low, but you're most of the time looking on the daily. So zoom in on the daily. And then it's basically the same. I'm going to the local high, local low. Of course, local, because we're on the daily, such a high time frame. Local is not like past hours or past days. It's like half a year ago. But like here, this was the all-time high. I like to always target or indicate the all-time high. And then you see, this was the move to the high. Where do we lose it? Here. Where do we retest? Here. So this is a very important level. And this is potentially not an entry, of course, but a possible take profit, or a possible indicator of we see prices strongly gaining this, then we know, we can easily make new all-time highs. If you look further, we swept everything here. Where do we make a new low? I won't really count this as a new low. It is a new low, but you wick it, you try to hold it. Where do you lose it? Where do you retest this? So this is also a very important level, and whether these lines are thick or not doesn't really matter. And of course, that's the same thing from down. Maybe you zoom out a bit in the weekly. You can see that now, of course, we're going to do this piece of price action. So we zoom in again, and now we look here in this range. This was the low. We gained the low, of course, the move to the high is up here, but we clearly see that we gained something here because we're up 25%. So we gained something. Where do we pull back here actually? Because we can say it's here, but we still retested this. So this and this is also a very important level, and this could be a possible entry, because yeah, I'm trying to do it purely based off price action, but if you look at the full story, Bitcoin historically, and if you believe in the project, you think it's going up. After every bear and after every dip, it's going to make new all-time highs again. So this is surely a possible entry. You don't want to set a limit order here, because as mentioned, of course, price has already dropped a lot, and maybe with altcoins you're looking for entry, price has already dropped 90%. But from this price point, price can drop another 90%. Of course, not on Bitcoin, but other stocks or assets, it can surely happen. And for example, we want to see something like this. Price sweeps it, we don't entry because, as mentioned, this can happen, and then you're instantly down 10 to 20%, and no one wants that on their investment. Okay, if you're investing in the long run, 10, 20, 30 years, that's not the end of the world, but still, why would you sign up for a minus 10% instantly? You wait for this type of gain, and yeah, now we indicated this as the previous high, it doesn't matter, and then here on the retest, you entry. And that's basically how investing works, in my opinion. In our strategy, of course, if you ask another person, they might see no strategy, but this is just how we invest and swing trade in price action. We always do it with confirmation, but still based on price action. We just don't risk being instantly stopped out or instantly in a loss, because with investing, you're risking more capital. I'm repeating myself, I know, but with trading, you risk 1%, investing, you risk more percent. So to summarize this, if you want to chart or look at the levels, it's basically the same thing as a lower time frame. Look at the failures, look at the holds, the origins, of course, because as mentioned, we have origin here. If you really look, you see that this was the low here. Where do we gain it? This is you move, you gain it, we retest it here. So this is your origin. So this can be a very important level for you. Another very important thing when it comes to swing trading or investing, you need to have a plan. You need to have a plan. I'm entering here, I'm exiting here, I'm risking this amount of money, and I'm exiting here. Yes, I am a fan of having a stop loss even when swing trading, because let's say Bitcoin, you say you want to entry here, and you say, I'm not going to put a stop loss. Bitcoin is never going back to 20k, to less than 20k, never happens. But what can happen? It can surely drop. Anything can happen in financial markets, and now with Bitcoin, surely I'm also a bit pro Bitcoin. I don't really think we're going back there, but let's say you're entering in a bull run, or with stocks or altcoins, it can always dump. So I'm a fan of setting a stop loss even while investing, because you don't have a liquidation when you invest with no leverage, but still I'm a fan of having a stop loss. And then you say, for example, this is my stop loss, that's it. And of course, same thing with TPs, because if you don't have a plan, let's say things are going according to your entry, price starts pumping here and price is here, clear uptrend, nothing seems to happen, Bitcoin seems to just speed up, go to the moon, go to new all-time highs. You think, no, I'm not going to cash out, things are going well, and then it makes actually a new all-time high. Oh no, this was just a start, we're going to make new highs. Oh yeah, and then price starts doing this, and you say, oh, this is just a pullback. Every massive uptrend like this here has a pullback, we're going to make new highs, and then price does this. And if you're here, you're still lucky that you're in a profit, but many people wait until here, just retest, and then they're in a loss after having almost more than a 2x, 150% profit, and then they still have not taken any profits. And that's the same thing with your stop loss going down, because many people they don't set a stop loss or don't have an exit plan. They think, oh, I'm buying low, it will go up anyways. They don't have a plan here, and when they're down 10 or 20%, they either say, oh, I'm in panic, I cash out everything and I'm lost a lot of money, or they either just buy again. They think, oh, I'm buying, and if you're lucky, price is this. But if you're not lucky, and you shouldn't be dependent on luck or being unlucky if you're investing with your own money, then price keeps dropping and you're losing even more money. So having a plan is very important. The famous saying, no one ever got broke from taking profits. For example, let's say Bitcoin, this is the, let me clear this for a second. let's say Bitcoin drops to 30K and that's the bottom. And I start investing, I start buying Bitcoin, then I'm 100% taking profits in this zone. 100% sure, because what? That's almost 3x from my entry. That's amazing in maybe 2-3 years. That's amazing. First of all, you shouldn't be aiming for 100, 200, 300, 400% as your first take profit. And what if price doesn't make new all-time highs? I know the trend on Bitcoin is bear run, new lows, new all-time highs, but what if it isn't? What if World War 3 happens? Then the cycle says fuck you. So that's always have your plan, take your profits. You're not going to get more bulk of profits. And of course, if you take profit and price pumps another 10%, you're going to feel like you got left behind, but you still have your profits and you don't have to act with your emotions. For now, that was it. I think that was a very strong message today in this video about swing trading, investing. Maybe not the longest video, but I think I already delivered a lot of insight and value about these topics that I really didn't explain in detail here in this video, but already explained it several times in other videos on the channel, so I still think it's clear. Want to thank you guys for watching, and I'll see you guys in the last episode, episode 10. Bye.